right, good morning. So January 28th, I just want to break down my trade that I took this morning on futures to the upside. Starting off, take a look at these two charts here. I've got S&P on the left, NASDAQ on the right. That will never change, all right? And of course, you can always see that at the top left of each chart. So right now, I'm looking at price on the 9:30 market open candle. Take a look at my London session low on both charts. My London session low on S&P is at 2 a.m. and you can see how far it is down here where the 9:30 candle just broke it. But if you look at it on NASDAQ, it's on the same time, 2 a.m. But it was actually 7:15 when we broke London low over here. And you can see how far extended we are from that low down here on NASDAQ. So NASDAQ was the weaker market in comparison to the two. But when I first saw this on the 15-minute at market open, I was convinced that price wanted to push lower at the time. This is what I thought in real time. I thought that the market was going to create a 15-minute gap right in here and continue lower. But the reason why I like to wait for candle closures is because things can change so fast. So when I saw price break below this swing low with this type of volume, and when I say volume, I'm not talking about buy and sell volume. I'm talking about displacement or the size of the candle. When I saw this size candle close down here, well beyond London session low and this previous swing low, I anticipated lower prices. Same thing on ES. We closed very far beyond the 715 low, but we had just broken London session low. So I was prioritizing shorts on NASDAQ. Here's what happened. The very next candle pretty much almost invalidated my idea for shorts on NASDAQ. And you'll see in the recording at the end of this breakdown where I actually say this candle can change things very quickly. The reason for that is because this candle at 9:45 on the 15-minute chart pretty much invalidated my idea of a 15-minute gap happening over here and pushing price lower. I ended up getting the gap on the S&P. So if you look at it on the left, you can see this is a confirmed 15-minute imbalance right here. All right. And so with that being said, my focus shifted from NASDAQ over to the S&P because a short was still possible, right? We may take out the previous swing high on NASDAQ, whereas ES goes into an imbalance and then continues pushing lower. That's still a possibility. But in the live recording, I put a note saying that I would wait. I'm going to wait for this to see if it holds or see if it fails. I did not trade this as if it was going to hold. And instead, I waited. So if this bearish 15-minute fair value gap fails, then I would target longs to the high. Okay, so let me show you what happened. On the very next candle, right here, this right here to me was failure of this 15-minute gap. And the reason for that is because of how large the candle is and how we go beyond the 15-minute gap. I've had many situations where I assume a 15-minute fair value gap is failing because price is starting to push through it. But one thing that's different between those situations is the size of the candle itself. To me, a candle as large as the down candle that created the gap makes me think that this thing is failing. But let me show you what this looks like on the 5-minute. Here on the 5-minute, you can see how price just started running up, and it takes out this 1 hour level. But if you look at it on S&P, the S&P was also doing the run up, but it was still a ways away from the same 1 hour level. So here's a question I have for you. If you've been watching my videos and you know how I trade, what is this dotted line, this 1 hour dotted line? That's a little trivia question for you. It's a very important level, but plus points if you know what that level is. Okay, take a look at this run up here in these three candles, these three bullish candles on S&P, and then take a look at it on these 4 bullish candles on NASDAQ. I was looking for a buy when I saw that this 15-minute gap was most likely failing. We had a break of structure over here. We had a break of structure here. So I'm looking for a buy. My problem is looking at this on the 5-minute, where am I going to put my stop loss? Like, I have a place for an entry, but I have no area for a safe stop loss. So let's say I was to enter here. My safest stop, according to this current picture for me, is all the way down here. Okay. And this is just, all right, this is a little absurd. I can't have a stop this big and expect to have a good trade reach its target. I don't know that price is going to double to the upside of the size of this because I'm targeting 2R. So in the video, I'm actually like, you see me measuring to see, okay, I can't do a stop of 147 points. That's just not going to happen. My stop losses on my normal trades are already big as it is. I'm not trying to double or triple that. I'm trying to reduce the risk and get a good entry. But if you're looking at this, I have no safe place because there's a gap right here, and soon there'll be another one in this area here. So even if I was to take an entry right here, price can still come down into the range of these 3 down closed candles and still be bullish. Price can do something like this. It could pull back, get me into this trade, get me into the trade long, but it could continue to pull back into the range of any of these 3 candles and still be bullish. That's not something that I wanted to risk. So I ended up waiting for another signal, and I did find an entry, but let me show you what this looks like on the 2 minute. The same thing. I don't take entries from the 1 minute anymore. So I'm looking at minimum 2 minute and then 5 minute. But the 2 minute showed the exact same thing. Look at this. There's gaps in here, but there are no swing lows in this run up that give me the idea that this would be a safe place for my risk. So I ended up hopping back out to the 15 minute, and I'll show you where I put my entry. So back over here on the 15 minute, after getting this swing high with a strong close above it, I ended up putting my entry there, and my stop loss went right below this previous swing low right here, which I'll make red. And this is a stop loss area that I've used before in the past, and I'll explain some of the logic behind why I use this area. From there, I targeted 2R just above London session high. All right, so let's break down this swing low. If you remember me saying just earlier in the video, when price first broke below this, it looked like this. Nice bearish candle, and I even said it looks like price wants to go lower. And then the very next candle pulls price right back up. So 2 things are happening at this swing low. The first thing is when we broke below this swing low, price is raiding the sell side liquidity that sits below it. But the continued delivery of lower prices causes retail to go short. Look at how bearish this candle is. Before we got that bullish one, this thing screams, I'm going lower. And that's what retail is looking to do. They are selling this breakout when they see displacement like this. So if people are in sell positions, their stop losses sit above the market. It sits above current price. When I saw the snatch happen on the very next candle, this is to me telling me that this is where all the damage is done. All the damage is happening here below this low. So if the market wants to push higher, it's not going to come back below this low. You understand? This is where the trap traders are. So to me, it's almost like a reverse change in state of delivery. So at one point, the strong close let me know, okay, we're going lower. But the strong close above is like a false change in state of delivery, or what I would call reverse change in state of delivery. But I wasn't sure yet, because if you look at it on S&P, I now have what I was looking for in order to go short. I have the confirmed 15-minute fair value gap, where price could have easily done this. It could have just went in here and then pushed lower below this swing low. So that's why I waited to see who was telling the truth. I waited to see, is this gap going to hold or is it going to fail? And this swing low would be the telltale sign of what the market wanted to do. So in order to do that, I had to still wait for another 15-minute candle, maybe even 2 15-minute candles. But this is what happened. When I saw this giant candle get printed and close above my H1 level, and how far it went beyond the 15-minute gap. I mean, look at that. That to me was enough for me to think, okay, this thing's good. So that's why I put my stop below this red line, and I didn't try to cover all the way down here. That's just ridiculous, right? So take a look back on the 5-minute. There was the entry. Shortly after taking out that H1 level, I'm not going to tell you what this level is. I want you to see if you know for yourself. Shortly after taking out this level, we pulled back and it got me right into the trade. The trade was at 10:05. On the 15-minute, I'm looking at London session high on both markets. In the very next candle, got me out of the trade. So that was my trade for the day. Before I show you the recording, I want to show you a previous trade where I actually used this type of stop loss. So I want to show you that really quick. So over here on YouTube is a previous trade that I took back on October 10th. 2024. Take a listen as to why I'm putting my stop loss where I am. I gave you the logic and the breakdown already, but here's just an example of a trade I took where I used the same approach for my risk. Now, here's the thing. I'm going after 2R here. Originally, like, yeah, you want to get above the news high, but I didn't want to put my stop loss all the way below here. It would have been nice if I could, but a stop that big, I would have never got 2R. Like, it's just way too big. So I compensated by doing this little thing that I do now. It's not really a trick or anything, but I took a previous swing low right here, and I'll make it red so you can see that. And I put my stop just underneath that low. And then I targeted 2R to the upside. It would have been nice to go after this high, right? Because that was my original target. But guys, I don't even reach for the stars anymore when it comes to liquidity. I more so just focus on 2R because I'm just focused on getting the base hits. So let's kind of just dial this back. I'm gonna go back to the 5 minute after showing you that, right? So just again, my entry is here on this gap. I'll make that a different color. All right, this 1 minute imbalance right here. Entry came in at 9:59. My stop just underneath this old swing low here because I did not want to cover for the whole breaker, and I'm going after 2R, which is just below the news high. But I will show you what I did when I watched this play out. So back on the 5 minute, you can see this is what it looks like. We're going after this news high. I'm just gonna hit play. All right, price did pull back a little bit. Fortunately, it did not stop me out, but you can see right there how far it came back in drawdown. Again, my stop is down here. Price started pushing higher. Now right here is where things get really interesting. So here's the news high. So as you can see, that's why I put my stop there. If the damage is truly done on that swing low where price broke below and pulled right back above, then logically price is not going to return to that level and let those traders get out of their trades at break even. That's not what the market is in the business of doing. It wants to take your money. And that's why I put my stop below that low. That's why in this case, I got out with a good trade. And here is that recording.